All right, guys, welcome back to another trade review. My name is Forrest. I invest in stuff. I day trade, talk about investing, all of that. We're going to look at a trade that I did on Friday, December 23rd. I think this is a really solid example of my trading style and ultimately types of trades that you should be looking for. If you like this type of content, if you're a new trader, if you're an experienced trader, go ahead and hit the subscribe button, guys. Yeah, let's grow this channel. Give me 10,000 subs. Been chasing the number for a while now, so I appreciate each and every one of you. Also, do have a Discord. Go ahead and hit that link. Join the Discord. I post all of my trades. So this trade that we're about to go through now in real time as I'm trading. Yeah, so follow me along on my journey. I appreciate each and every one of you tagging along. Let's jump into it. So on our screen right now, we have a trading on the underlying of SPX, right? So I trade SPX every day, and there's really something that I'm always looking for when I'm looking at SPX, right? And that is pivot points. So let's go to the 5-minute, update this chart, and it's not looking much better on the 5 yet for this entry and exit, but you will see some pretty clear levels here, right? So down here, this level, we have a pivot there, and then we had a top pivot kind of here and here, right? Which I'm drawing with these horizontal lines. They don't show up too well with this default color. Let's make these red. It's red, right? So these are all these different pivot levels, right? And these are dynamic, right? These are happening throughout the day. I entered this trade, we can see here at 15:45. So right before the bell, 15 minutes before the bell, 3:45. And then I closed it here in the last bar. There's a few other pivots, right? So I was actually away from my desk most of the day, which is why I traded way less than I would have. But there's some really clean pivots on last Friday, especially looking at the 5-minute. I usually trade on the 15. There was this one right here, which came out after open. So this is the 11 o'clock bar. Let's actually just start at the open. So where's my 9:30 bar? So here's 9:30, right? We had this gap down almost, right? Really strong top wick, sold off, bar coded, right? A little bit. Then we created this bottom pivot, right? And how do you know it's a bottom pivot? If I ignore the rest of the time series, if I can imagine and almost cut off the rest of this chart from this 9:55 bar, we can see that we put in a new low, the bottom wick, and the next candle that closed had a really strong top wick, but ultimately it was a green candle. So lots of different ways to interpret that, but I would at a minimum look for another green bar. So you're not going to get too many points. If you would have took a call here right at the close, you would have got from 38.04 up to 38.10, 6-point trade. If you closed it on the next candle, and if you let this ride a little bit up to pre-market highs, which is here at 38.27, another good level to look for every single day, you would have went from 38.04 up to 38.27, right? 23 points. 23 points on SPX if you're trading options like I am. If you're trading futures, it's a solid amount of money there in that trade. I didn't take that trade again because I was not at my desk. I met up with a friend of mine from Italy, but looking for these pivot levels is really how I try to take my trade. So let's go ahead and clean this chart back up a little bit, and let's look at this trade on the 15-minute. So these are actually in the same bar in the 15-minute. Let's go to the 3-minute. Maybe this was an end of day trade. I actually thought this was a different trade, but this is fine. I'm still going to walk you through why I took this trade in particular and how to use pivot levels. So there's a few different ways to think about pivot levels. And the first and foremost is that the market generally, right, unless you're on a trend day, and we're usually not trending, by the way, right? So most of the time when you're looking at the market, the odds of it just continuing to go up are very, very low. Looking at, I hate TradeZella sometimes. It just won't load my trades. There we go. We'll actually just go to the 1-minute. That might be the easiest thing to view this on. I don't trade on the 1-minute, but we'll get back to this. So looking at pivot levels is going to give you the confidence to give you time to get into a trade, right? One of the scariest things for new traders to do is get in, right? You're always so worried, like, oh, what if it reverses against me, right? What if it does this? What if it breaks out, right? Well, for one, the market usually isn't breaking out, right? The odds of you getting in during a breakout are very, very low. So even if you got in, let's just look at this time frame at 10:40 p.m. on the screen right now. Let's say we come off here and you get in at some point in this zone, right? Let's say you get in here, right? You buy a put, it goes up a little bit, and then it comes down. You're so far up in this range here, right, that you have plenty of time to let this ride. And the odds, again, of this continuing higher and higher and higher instead of, retracing, especially when we have a pre-market high way over here, right, are pretty low. Or even if, looking at this pre-market high, right, you'd go red, might actually hit a stop if you were using, pre-market high as a level. But eventually still, even if you got in here, you still would have been back in the green, right, by trading in, right, using these pivot levels, right, the edges or the extremes of your daily range, right? And the market tends to carve out the extremes of these daily ranges in the first, 45 minutes to 1 hour. So what I look for is there's a few things I'm looking for, but I'm gonna keep this simple. One, I know that, SPX likes to form wedges and all these other different types of shapes. But in general, when I hit one of these resistance levels right here or a support level, I know that the odds of us flying through it are pretty low. And so I'm going to take a trade going the other way, 9 times out of 10. I'm gonna look for confirmation in DXY and the VIX and all these other things, right? I'm gonna look at Apple, I'm gonna look at Amazon, right? I'm gonna look at Microsoft, Nvidia, I'm gonna look at the market as a whole, I'm gonna look at XLF, XLV, XLK, I'm gonna look at all these things, but 9 times out of 10, if everything's good, I'm going to take that trade, right? I'm not going to take a trade here, right, at this level. I'm not going to take a trade here necessarily at this level, because we can see that this is part of this continuation upwards. Now, that's not to say that other people won't take this trade perfectly and make money on that trade. I'm just saying that I wouldn't take that trade. That's not how I trade. It's not how I'm able to trade, honestly, right? And a big part of trading and something that I'm getting better at is knowing yourself, right? There's infinite money potential in the market, right? If you look at every single one of these peaks and troughs, they all present an opportunity to someone. You need to understand what type of opportunity you are able to take advantage of, right? And I'll say that again. You, whichever camera you're looking at, need to know what type of opportunity you are capable of taking advantage of. This is the source of FOMO, when you see other people make money in a trade that you didn't see. But you need to understand that while that person is able to see that trade, they might not be able to see your trade or a different trade, right? And so when you recognize that FOMO is really just you at odds with your own ego and a bunch of other things, you can let that go. We all experience it. I'm not, free of FOMO, but I'm getting much, much better. And when I get FOMO now, it's almost instantly I just turn it off. I'm like, you know what, whatever. Like, there's literally gonna be another trade. There always is, guys. And if there isn't another trade, it's because the world has ended and we have bigger problems. So let's look back at this trade. So we had this downward pivot, and you can see here that I bought calls, right? So we were coming in, and this was an end of day play, right? So this isn't necessarily a good example of everything I just talked about, but this was actually a momentum play, right? So we were squeezing into the close, which is why I anticipated here. And so you can see that we have this green. We can see that volume is actually increasing on this green a little bit. And so I bought calls. And so keep everything that I just said, about our pivot levels. A better trade would have actually been entering calls down here, obviously, right? And riding this all the way up. I saw this momentum, was like, you know what? I'll snag a few contracts, 38.45 calls, and see what we get out of it, right? So we can see that these immediately went red, and then I sold up here, just holding these right into the close, right? Almost, right? So if you hold these for like 7 minutes, being able to do that, or the reason I was able to do that is because I know that this was going to seek out this level, right? The odds of us rejecting here completely and reversing, very, very low, right? We already had this bottom pivot in. We were forming this wedge on the day, right? And I'll show you guys, I actually had this line drawn. So the reason I took this trade is I knew we were seeking out this daily high, right? We were going to come up in this range because there's market participation there. There's liquidity there that, is going to want to get out, get in, whatever way you want to think about it, right? We were going to get to that level. So that's why I took that trade. It was a 74.36% return on my initial capital, which is pretty good. I don't remember what my stop was. TradeZella has this cool thing. You put in a stop. Let's just say that my cost basis was, let's see what it was. Let's see what it was down here. I got in for what, $1.10? Let's just say it was $1.10, right? So if I put my stop at, 70 cents, right, it'll calculate for you the, return multiple. So this is, the R multiple isn't the multiple of your total capital to what you got, because then it'd be less than 1. The R multiple is based off of how much you risk. So I put in, if I bought this contract for $1.10 and I have a stop at 70, it means I'm really only risking 40 cents. And so on that 40 cents per contract, I made 2.13x my money. I don't know what my stop was, but that's how it's calculated. I trade level to level with options, so my stop is literally visually. I don't know how to automate this yet. Premium prices always adjusting due to theta, right? But basically, once I hit a level, and you can see those levels if you join my Discord, but if it hits a certain level, I'm out at that level, regardless of what the price is at that time. Sometimes I will put a stop if I'm swinging at like 35% of my basis, or sorry, with accepting basically a 35% loss on my basis, right? Maybe 40%, depending on what it is. But when you're trading zeros, you can't have a stop and just let it ride. You have to constantly manage your stops. And so what I do is I have hotkeys set up, and so I'll actually just look for levels. And once we breach my levels or my supplier demand zone, I'm out at whatever that is, and then I can go back into the math and figure it out. I just don't have those here. But it is a good idea to know in general what your R multiple is. I'm going to work on a way to try to calculate that better based off of my levels. I just haven't figured out yet. For futures, really easy to do because I can actually just look at what my stop was and, you know, just put it in there. But that was this trade. Solid trade. What are the things I could have did better here? Well, obviously, be at my desk is number one. Getting hit in down here. I'm not sure why I didn't take this trade. Let's actually look at this on the 15, and that might give me a better story. Yeah, we had this bottom level here, and I remember what I was doing. I was typing about the shape of this chart to a bunch of people in the Discord. I didn't take the trade, but I remember watching the market and I was thinking, man, I should have took this trade, but I was literally explaining to something to someone. So just a little real life trade off there. Not a bad deal at all. You know, made 800 bucks. So that's that trade every single day. I'm going to keep doing these trade review videos so you guys can see the different types of trades that I take that are profitable. I'll also do some trade reviews of losing trades. I'll put them all in a playlist that I'm going to create called trade reviews, which I think may already exist. But if you want to see just what every individual trade looks like after the fact, you know, the money that's in there and the money that I get out. So stay subscribed to the channel. Yeah, I think that's it for this one. I appreciate you guys. My name's Forrest. I invest in stuff. You should too. See you in the next one. Peace.